I'm Michael Fox, and this is the Prospector Podcast. And we are on location at the New Orleans Investment Conference at the lovely Hilton Riverside in downtown New Orleans. And I have regular returning guests, at least once or twice a year. Kai Hoffmann of SOAR Financial. Welcome, Kai.
Mike, it's always great to be with you. Thanks for having me on.
Yeah, not a problem. Well, I kind of felt obligated to have you on. I heard very specifically that you flew all the way over from Frankfurt just for this podcast.
Just for this pod? Absolutely. It was worth it. I'm glad we're doing this on the last day I'm here, and really excited to be with you, Mike.
Yeah. Before we get too far into the weeds of everything, let's give everybody an overview of what SOAR Financial actually is and why you're a guest.
Oh, absolutely. No, SOAR Financial is a construct of a number of companies. One of them is Oren Inc. That's what you're hinting at, because we track all the financings in the junior mining space, meaning we look at companies below $1.5 billion in market cap and equity financings, and I'm putting an emphasis on equity here, below 100 million Canadian dollars as well. So truly capturing what the junior mining space is, and we're just tracking the health of it on a daily basis. We're looking at financings by investor or into these companies, and it's looking rosy so far.
That's not all the SOAR Financial does, though. What's the rest of the company?
Okay. Sorry. Yeah, no, we do a lot more. Wearing way too many hats, keeping way too busy here. Unfortunately, days only have 24 hours, but we run a podcast called SOAR Financially. It's on YouTube. We run a corporation or a collaboration with Brian London here, the organizer of the show as well, called the Gold Newsletter Channel, where we interview a lot of companies. And we run our own conference in Germany, Deutsche Goldmesse, the German Gold Show, twice a year. It's coming up in a couple of weeks' time as well. Really excited for it. $4,000 gold is giving us record attendance. We're sold out on the corporate side as well. So we're really excited about what is to come here.
Yeah, perfect. So the last time you and I got to sit down, we were together in New York at the infamous SME New York conference, where the industry kind of gets together and wraps their heads around some of the problems we have as an industry and what we think we should be doing going forward. At that time, the financings were not bad, but they weren't great ever as well, but they were starting to look like they were turning. So since May, how's things actually, where the rubber hits the road, how are things?
Oh, it's completely exploded in a good way. And May, we were still cautious because the gold market really only, or the gold space and the mining sector really only took off in March, early March. So when we spoke in May, we were still cautious. Like, what does it mean? Is this a trend? And yes, it was a trend. We've raised a lot of money since then. We're over $5 billion in capital raised. We've beaten the last 3 years already. We've actually beaten the last 3 years already by the end of Q3. So whatever now we're adding to it is just gravy. I'm curious to see whether we're going to beat 2020. That's a big ask still, because we sort of missed the first 3 months of the year, or the first 2 months of the year. Nothing was really going on in January, February. It was only after PDAC, which is in early March, that the markets really kicked into higher gear. And now we're looking at record financing sizes, and we're seeing a lot of bigger financings as well. The grassroots explorers still having a harder time raising capital. It's still not as easy for them. The money hasn't trickled all the way down, but it is coming, because the sector is now financed. It might be even overcapitalized to a degree, if you want to quote Rick Rule. And we're in for an interesting time, because those companies finally have money to generate proper value.
So what was that record in 2018, you said? Or
16, it was $6.6 billion within our coverage universe. It'll be difficult to break, not difficult. We're on the road to get there, but I think we won't exceed it, because we're just missing 2 really good months this year, January and February. The frothiest on record at Oren Inc. was 2011, actually, where we raised over $8 billion. That was an ultra frothy market. But if gold prices remain above or around $4,000, I think 2011 levels are reachable or feasible next year.
Okay, wonderful. Yeah, what you're telling me doesn't surprise me. I've noticed through press release, there's been a lot more asks. The asks have been fulfilled. There's been a lot of oversubscriptions. There's been larger dollars raised, et cetera. Even with our clientele and the people I'm talking to on the floor here, I'm hearing a lot of people already have their 2026 exploration and drill programs financed and ready to go, and they're still working on finishing up their 2025. So certainly an interesting time, and I guess you would look for those companies to, if the iron stays hot, to continue to finance so that they could get into 2027 and beyond as well. Are you seeing anything that would indicate that that might be actually the case?
I think we're on track to do that. The gold price environment is conducive. Investors are looking for places to park their cash and invest and maybe acquire some cheap stocks. And that's happening. Like in April, we got a bit of the Liberation Day scare in the main markets. Gold also dipped around that time, but not as much as the S&P 500. And the miners have been outperforming. And the gold has been outperforming the main stock market for over 25 years now. Investors are only starting to realize that now because we've beaten actually, and barely, like we barely beaten the S&P 500 last year, but we beat it. And I think a lot of investors haven't realized that because also the risk premium that you have to ascribe to the mining and the gold mining space, of course, is higher than perhaps at S&P 500. But now with tech valuations and AI company valuations being out there, some of the investors might be looking elsewhere. Palantir crashed hard today, down 8-9% today, but off of good earnings results. So maybe there's some realism kicking back in.
Yeah, that's a good possibility. One of the things I've noticed at this conference, there's been a lot of good positive signs. I'm seeing a lot more younger faces coming through the conference, talking with people, because historically, when things aren't frothy and going well, this tends to be a rather much a senior's home for people at it. So it's nice to see a lot of younger faces. The other thing that's really struck me is the attentiveness of the crowd talking to companies, because again, traditionally, this is the type of an event where the people that are attendees, they're paying pretty good money to hear the speakers that are here, and that's why they're here. They go walk through the show, the exhibit hall where the companies are, and yeah, they'll note a couple of companies as they're going through, but they aren't as talkative as they have been this year. Have you had that kind of feedback with the people you've been talking with?
Well, they're busy. The hall is busy where the companies are, and what I'm hearing from the companies, they're actually having great conversations with existing shareholders, new shareholders. So the interest is high, I would say, from that end, because investors are looking for alternatives now. They weren't really keen the last few years, and I've been here before, where the exhibit hall was fairly dead. And even during the breaks, and that's a sign that we're maybe in a different type of market, or not just a sign, different type of market. We're definitely in a different market, but the interest is back, and like maybe we can make some money with these stocks. And I'm just worried about the whack-a-mole effect. Is the second you get a little enthusiastic and stick your head out even a little too far, you could just get whacked over the head. And I think that's what we're seeing. We're overall a bit nervous as a community because we've had 15 years of a bear market almost in mining stocks. We had little blips on the radar in 16. We had a little bit in 2020, 21, but nothing that was euphoric based on the financing data we've seen. It was still 50% below the 2011 highs that we've seen in 2021. So we're cautiously optimistic still. And people are talking about taking money off the table, locking in gains. That's not bull market territory. That's not euphoria speaking. That's cautious optimism.
Yeah, and I see a lot of that, but at the same time, feels to me different this time around than it did back then. Back then, we were getting a bump, but there wasn't a real reason or a catalyst for us getting the bump. Right now, we've got high commodity prices, the fundamentals and the things that are driving those high prices are still there. They're going to be there for quite some time, even if we were to endure a significant correction. But more importantly, the mining companies themselves, especially the ones that are active miners, as opposed to a lot of the explorers and developers that we would see here, they're cashed up. They have low debt, and they're starting to run out of resources. So, the other thing that I talked about the press releases I get on a regular basis to talk about the financing. I also see all the mergers and acquisitions, of which there's a lot. Another one this week with Coeur buying New Gold out as well. So we're seeing all the right things that suggest that maybe this time it's real.
I think it is real. There's a new price floor, and we just have to change our mindset. I've been saying that after the Beaver Creek conference, that my main takeaway is I have to change my mindset. A lot of companies that didn't work at $2,000, they work at $4,000, meaning their asset is all of a sudden economic. It wasn't maybe at 2,000, and nobody would have given them any money. Now they're being bombarded with cash. In a good sense, financings are triple oversubscribed, and all of a sudden they're printing money. Small scale production scenarios make a whole lot of sense. All of a sudden, right? All of a sudden, a project that was not feasible is printing dollars, and I think that's a big change. And that I still need to wrap my head around it. I need to reevaluate a lot of companies that I had on my shit list. Quite frankly, I was like, okay, I got to look at this from through a different lens, and that lens needs to be sharpened, maybe needs to be cleaned a little bit, because the gold price just changes everything. And so far, margins are staying healthy, meaning costs haven't creeped up. It's interesting that Agnico's costs actually have been going up and that's a good problem to have because of royalty impacts, because the higher royalties get triggered because of higher gold prices. Yeah. So I think that's a good problem to have, but so far, cost creep hasn't really set in. The oil price is still low. I was just in Texas where the gallon of gas costs $2.35, which as a European, as a German, is obnoxiously cheap, right? But so far, we haven't seen that cost creep. Margins are expanding still. And in Q4, we should still see higher average realized gold price by the miners.
Yeah, no, I would agree with all that. And but the other interesting thing about all of it, and it makes me think that it's different this time, is that not only are we seeing the M&A, but you alluded to some of the borderline projects that are out there. And I've seen some PEAs that, have been, 5-6 years ago, and they're coming up to actually doing a proper feasibility study. And the PEAs were profitable at like $1,700, $1,800 gold. And all of a sudden you got a gold price that's $4,000. Well, those PEAs become like obscene.
Yeah, it reminds me of the Excel sheets when you start mapping out some business plans and business models. You start plotting in adoption rates or something like that, and all of a sudden you see that hockey stick move in IRR or in revenue. That's exactly what that is as well. What an interesting tidbit is, like you mentioned, studies doing those at lower price valuations. I actually just pulled up Raymond James's commodity price forecast for 2025. It is 33.26 for gold. $3,500 in 2026, but long term, we're still looking at $2,900. So there's room for upside. And you start doing the math and start doing the valuations based on maybe more realistic 3,500 to maybe 3,800 if you want to be conservative. Then the numbers and the ratios, the valuations take a nosedive in a good sense, because that creates a lot of headroom that hasn't been fully priced in, just because the institutions are still using, let's say, outdated long-term price forecasts.
Yeah, that's true. And I'm trying to remember which, I think it was Bank of America last week reevaluated their long-term target price for gold. And, it was $5,000. And, but that was a 2 to 3 year target. But they were legitimately saying $5,000 gold. I didn't see any eye rolling when they said it. And I think you're exactly right. We're seeing new floors and new opportunities. And I don't think even when it gets down to some of these companies that we deal with here that are financing, I think there's a whole raft of them in this room that are up for a re-rating and probably within the next few months.
Yeah, I think we're starting to see that already, although the markets right now are taking a bit of a breather, which is healthy. Although, like, I'm looking at my portfolio, for example, we're still not at 2021 levels for many of these stocks. Yes, the GDXJ have run tremendously, but the juniors, and that's where I look at it, that's what I have in my portfolio, they're still playing catch up. So there's still lots of opportunity left. Yes, the majors, the producers, they have started to move. They're adapting to the new price environment. But the grassroots explorers, the juniors that have passed discovery, they're maybe in PA stage. They're still waiting for that re-rating to properly kick in.
Yeah, it's as we said all along, when this started to move, it wasn't going to be a tide lifts all the boats right away, but the tide's starting to get underneath some of these other boats that have been languishing for a while, and we're putting some new guys on it. I joked with somebody here. There's an old timer stock promoter that's going to be here giving a presentation tomorrow. And I said, wow, if he's here, that's definitely a bull market sign, because when things are bad, we don't see them. So, that's happening as well tomorrow. So that's another good sign. But not to be a Debbie Downer, but here we are. We're about 2 weeks into a price correction. Both gold and silver are off their price highs. They're not at full correction levels just yet, but they are off the highs. Do we see this correction languishing on for the rest of the year? And, as euphoric as we've been with the placements up until this time, does that put a damper on placements for the balance of the year? And are we looking at a January before things start to move again?
We're not really seeing a slowdown in financings yet. We're seeing a slowdown just in the metals prices themselves, but that has to do largely with the Fed and them pumping the brakes. Meaning like, hey, we're driving in fog, we're slowing down, we might not have enough data to make another interest rate decision. In December, only 65% chance of another rate cut. Gold loves rate cuts because it makes it easier to obtain, because we all know gold doesn't pay a dividend. So if interest rates are, of course, high, that means gold is less attractive. And with interest rates maybe staying at an elevated level or higher level, at around 4% or 4.25 or 375 basis points to 400 basis points, and the Fed is pumping their brakes, then gold slows down a little bit as well, maybe loses a bit of momentum, but the trend is intact. Right, the financing trend is still intact. I wish the stocks would react more positively. Like, it feels like we're back to $2,500 if I look at my portfolio, because we're back at 3,900, which we were at about 4 weeks ago as well. It's very interesting how $3,900 can look very different whether you're on the way up or on the way down. I'm not sure if you've seen the Matthew McConaughey meme. One, he's driving in his Cadillac, all relaxed, looking great and super fly. The next, he's from what was a detective show. He looks miserable, skinny, and horrible, but it's the same thing, right?
Yeah.
So, and I think that's what we're looking at in the space. Like, it depends on what side of the coin you're on, what side of the space you're on. I think we're seeing a floor. So,
I laugh at the gold market a lot of times, because I started in 2002. Gold was $280, and I go, you know what? I'm going to tell you right now, the gold would be $3,900, and everyone would get exuberantly happy. And then I'd say, but you're going to be pissed off about it. And they would look at me like I was nuts. But that's exactly what we're dealing with.
Well, we're at $3,900 again, or $3,940, which we were at 4 weeks ago, or 2 weeks ago, 3 weeks. I don't have the exact chart in front of me, but we've been there before, right? And it's looking very different. The mood has changed, although momentum is strong with gold. It hasn't changed. Like, I still have a hard time coming up with a bear case for gold.
No.
What is a bear case? Maybe the Fed starts raising rates by 50 basis points at the next meeting. All of a sudden, like, unexpected. Yeah, okay, that would kill momentum. World peace is another one, but we all know how likely that is.
Yeah, well, the last Palestinian-Israeli ceasefire lasted less than 7 days. So, yeah, world peace is well without our grasp. So the way these markets are moving, I think you and I are going to have to do this more than twice a year. And I look forward for the next opportunity for us to go through all of this, because things are changing, and they're changing rapidly. If people want to follow these changes in SOAR Financial, how do they do so, Kai?
You can follow us on our YouTube channel at Soar Financially, or follow me on X at JR Mining Guy, and DMs are open. Feel free to reach out anytime. Happy to answer any questions.
You have a safe trip home, and I look forward to us doing this again, maybe once more before the year's over or early next year.
Likewise, Mike. Thanks for having me.
The Prospector News Podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.